Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. What is today? Today is Tuesday, and we are getting closer to the Financial Festival, which is this weekend on Thursday. So trying to fit a lot in, and thank goodness the trading, has been pretty active. Every day everyone's trying to call top. Every day it feels like I'm getting another, warning email about a DeMark sell 9 this or a potential overbought signal there, or obviously you have to pay attention to them somewhat because we're so extended from where we started, as far as October is concerned, but where we are as far as the year, we're just back to pretty much where we started if you take out the overthrow. So, truly trust price action and keep rotating through the charts. That'll keep you a lot safer than listening to whoever it is on TV or whoever, what people have to say, because the market has been speaking and it's been speaking loud. Not saying you go in and chase today, but there's been lots of rotation, lots of sectors to rotate through, using tier systems, lots of ways to stay safe, lots of ways not to just fight a rally that's been going on for a month and blowing up your account short, listening to people rant and rave for 200 handles on how the economy doesn't back up the price action. But the bottom line is price action is truth. And if you're trading real money, it's very easy to blow up before your thesis is correct. You look here at the chart of the SPX and you'll see this rally has been fast and furious, and here is your bottom in August. Here's your double bottom with the red dog reversal low. Here is when the power came in and cleared the slower pivot. That put the rally back on track. Right here is when we took back the 8 and 21-day moving average, which tells you to be looking for longs, not short. Then all of a sudden, boom, took out the higher level resistance, poked its head through, came back, retested it, and let's just fast forward to where we are now. We are a little bit extended from the 8-day, so it's hard to initiate new longs. But until this trend changes, which it hasn't changed, and we're a little extended from it, it's hard to be too bearish. And if you look where we broke down from, which you could have made a lot of money short here too, we're really just right back into the mix of it. So now it always likes to push a little bit further because everyone who started shorting maybe when we came to the lower end here is getting pushed out into there, or if you started shorting even lower, which I know a lot of guys have done, you're definitely hating life. Hopefully you have a 401k that's making you money because your alpha is not being generated, trading wise. As far as the gap and go here in the spiders, that was intact, and then you had another gap, and go that held right there, and this is where we are now as far as the spiders. The 8-day moving average still in control. So hard to be very bearish until that happens. Granted, again, you don't have to be all in long here, but you shouldn't be all in short. Maybe if you did it today, which I still think is kind of wishy-washy, but granted, I know a lot of guys, again, rolling it up. So we talked about what could extend this rally, and the Russell has been, a decent vehicle, recently to play a little bit of catch-up, and, it definitely shook things up here, but I listed the chart saying not so bad here, hanging by a thread. Well, that was a strong thread, and it pretty much pushed back above it, gave you a little follow-through today. I'm still in some of this from yesterday, but smaller than I had last night. It's poking its head back into resistance. If you go across, still has some room. This, inverse head and shoulders pattern that we talked about, still intact, and definitely shows you a bigger measured move, but these things take time, and so if you trimmed a little bit today and you're in some still, that still makes some sense. The IBBs have had a big move. Also, the lower pivot to play catch-up is right here, and now it's extended. It's extended from the 8-day. It doesn't mean you could short it 100%, but a little work over here, and maybe it continues higher. But we're starting to get into this overbought territory, so you want to just be a little bit more careful. The XLF also had a push in the morning before fading down. Still very, tight here, as far as the XLF is concerned. So not even really extended as far as, this ETF. If we were to push through here, maybe it'll need a strong jobs number to show that rates could increase in December. That would help that. But overall, the financials have been okay too. Listed the XLF, the XLE way back here. Like we talked about how the trend changed, how you could play a catch-up laggard trade pretty much right here. First you had your igniting bar, then you had your first gap up that held. So right there, that gave you your first move, and then it retested it. and then from there came back up and then cleared this little descending pivot to give you a really nice laggard catch-up trade. And the way you can take advantage of something like that, instead of just making money back, is by listening to your law of moving averages, whereas a swing trade, you're out of it when it breaks the 8 and 21 day, especially when you have a head and shoulders pattern like you had here way back when, if you look back. And then once it broke the 200 day, no longer was an investment. So if you got out here or got out here, yeah, we're able to play this double bottom here, or even when it cleared with a gap, this resistance. And now it's heading into a spot that probably is a better trim than add. It goes probably the same for this OAHs, which aren't quite as strong. You could see a very similar pattern here when this accelerated trend broke here, or when resistance support broke here. Look at this head and shoulders pattern here. Boom, boom, boom. And then it broke the 200 day, and that was well above 50. So no need to be in harm's way. Came up, retested, failed, and it's just kind of doing it again right here. So, trading these things for active cash flow makes sense using patterns. And you did have a low and then a higher low and then it held higher again, and just took this out to head towards the 200 day. So if you're in the OAHs and taking advantage of it, good for you. Congratulations. You made some cash flow while other people might be just making some money back by obeying the technicals. As far as high beta tech, Apple been very good to us the past few sessions. It's now above all the moving averages. So first time that's happened in a while. It's probably a little overbought. You got a nice gap up after earnings. We had a nice trade above this 119.30. You had a cute short on Friday to us getting back involved long yesterday, still in there with less, and it's still working its way back up, and could probably use the rest. Usually what they do is in the beginning of the week, if they push it, maybe you get another day into Wednesday, and then they kind of pull it back. So all the guys who get excited to buy the 123 calls or 124 calls, they wind up getting worthless as the dealers keep their money. We'll see if we get one more day. Definitely has acted better, and right around here I said, again, my iPhone to head call was that we probably see a gap fill by year end versus a move back to support, and we're well on our way. And if you booked some money, then it doesn't really matter what I said. You just took a nice weekly trade. Little extended here, but still looks good. Amazon really not much, not doing much here, hanging tough near the highs. Google tried to push a little bit near the earnings high, couldn't quite get through, still looks good, best in breed. Facebook has earnings tomorrow, not doing much. Yesterday I got in some calls, didn't have much follow through today. I'm just going to hold the calls for earnings. I'm not going to try and be too cute. Bought it on this Red Dog reversal yesterday, no real follow through today. Earnings are on Wednesday, so we'll see. Here is your pivot. Don't overtrade this week. You had a lot of nice technical buy areas when it cleared this or when it cleared here. Now, it's a little unsure considering the size of the move that's taken place here in multiple weeks. This thing has rewarded stock pickers on every time frame as long as you've tried to be long. Remember this little cup and handle pattern that I went over with Kramer? If you Google it, Scott Redler, T3 Live, Facebook could get back towards highs, and that was in here, and that was there, and obviously even back from here. Look at the trend. It's been very strong. Much better buy than a sell, and building wealth here. Congrats, Zucker. And now we'll see if there's an extra move here for the active participant. So it's going to have to be a perfect report with very, very solid, guidance, etc., for it to get above there. So that's why I'm taking options instead of stock, just in case. Other situations, I know Sperling was talking about Microsoft, very strong. Look at this gap up, held the earnings gap. I definitely traded a little bit with him. Maybe tomorrow it trades through this spot to give a little extra follow through. Where is it coming up on? That's actually at highs. So historic highs for Microsoft. So we'll see if it could give you a little bit of extra follow through tomorrow. Definitely worth having something, but still, again, it's had a big move and it's Microsoft, so don't forget that. But at this point, technically, it's acting much better than it has in a long time. What else happened today? Tesla came out with earnings after hours. I think it's trading up considerably. Let me see what it's doing. Up 7%, up 16 points. Stock's been broken, and now it's at 224. So 224, where is that? That's not even into this old pivot here. So, if you're playing it after hours, good luck. I did not do anything with it. Still, all these moving averages are in front of it. So just take care. It's not the easiest short. People were shorted right after the numbers, and they got their clock cleaned. And if you switched when it went positive, you had a nice after-hours trade. And now, this 230's resistance, and then 237's a bigger resistance. I think the high it was up was closer to $20, which was about 10%. Still hard. It's very hard. It's been broken, and this is just a bounce. And you'll see tomorrow whether or not the gap holds. So I would just hold off there. FIT didn't bounce today. Still has a big unlocking. Talked about to check out 37 to see if that could hold, and basically came right into here. Didn't really bounce off it. I guess you'll see what happens tomorrow. There could be another day of selling before the shares are released, and I think they're going to be released on the 4th. So we'll see how it acts tomorrow into that. Some guys were playing this AMBA. AMBA had a nice first day up. Stock's been obviously battered and bruised, and it's so hard to play these type of plays. If you catch them, great. Gave you a quick day trade, and now you'll see whether or not it builds. It's been broken ever since, the 8 and 21 day broke here, or this little false breakout there, and it broke the 200-day there. So lots of ways to get out of this thing. Lots of broken trends on all time frames. You'll see if you can get something more there. GPRO did not bounce. Some people were thinking that it would bounce because, because AMBA bounced, the chip maker. It's still down here. It hasn't even attempted to get in this gap yet, so not much to do there. This has been broken. Everyone's like, Red Dog, when did you see this thing break? I haven't seen you trade it in so long. Well, if you look right here, look at that outside day here. Remember this little spot looked decent, and then boom, that wide range bar right there within this range told you, get out of Dodge. Look at that. It engulfed this entire range. You never know what's going to happen next, but if you get out when that happens, you get out of the way. And then it took out the 200-day here at 56. Saved you a lot of pain. Cut in half. So again, moving averages can help you. One of the rules, if you want to write this down, is you're only in momentum names or swing longs if they're above the 8 and 21-day moving average. If they're below it, you become neutral, becomes a two-way trade. Then you can test lower moving averages. If something breaks the 200-day and stays below it for 4 or 5 sessions, it's not even an investment. Okay? But when things are above it, like the S&P or the spiders have been for the majority of this move starting here, you do not just try and short it. There are guys short the spiders from 197, or talking about being shorted from 197 or 199 or 203. And a lot of these guys don't even trade. They're just ranting, and they're probably blowing up traders by trying to be adamant and talk a big game until they're correct. They'll have one down day, and then they'll talk about all the momentum monkeys who are chasing this rally, which is the last thing that we did. We just tried to methodically be involved with it. So with all that said, tomorrow's another day. I think a lot of guys have been having success, buying the dip, rotating through sectors, playing the catch-up areas, looking for some laggards with the day one, sticking with the leaders. Apple's been great to us. At this point, it's probably a little long in the tooth, but you could get maybe another day. And let's just keep doing it until all of a sudden something changes, and we'll see it. But wait till you actually see it. I know I came in short on Friday. Friday I went out short. I got out of all my longs Friday. And then, Monday we gapped up. We got stopped out at 208.80. Okay, 208.80 in the spiders is where, we got stopped out. A lot better, than being, short and adding to it through the highs and maybe getting stopped out through yesterday's highs. So, you could try it here. It didn't work. I know I tried it here also, and it didn't work. But it gave you also some time to reevaluate. At some point, an outside little session like this might equate to more than a day trade. But until that happens, try and stick with it. Or if you don't feel comfortable buying after a big move like you've seen here in certain stocks and sectors, then just do less and wait. Versus, throw money out the window, because throwing out the window, money out the window is just not a lot of fun. You might as well donate it to charity. It does much better for the common good. Have a great night. I'll see you tomorrow.